thanks for joining me on my market report. My market report is on mortgage rates. We discuss what's impacted mortgage rates on a daily basis, and sometimes it might come from the economic calendar or headline news or geopolitical or a combination. And then sometimes it can get really confusing out there if the market changes, whereas the market sentiment, whereas good news is now bad news and vice versa. And somebody who's sitting out there may be wondering what's going on here and why it's reacting the way it is. We try to give those explanations as to what's going on and hopefully give you the information you're seeking. A little bit about myself is I'm a loan officer. I do work with the national lender. We do loans in all 50 states. So if we can be of service, whether if it's a refinance or purchase, we're here to help. We got some great programs out there available, and we got some great rates and great service, even better. Um, Please reach out. We'd love to be able to talk to you about how we can help you. But more than that, we like to be a resource. So if you guys got questions about anything and we can be of service and answer any questions you might have, please pose those. We are here again to answer any questions and then be your resource. Uh, to move along, today is kind of kind of got this kind of late today, around noon Pacific Standard Time. The market's closed early today because around 11 o'clock Pacific Standard Time because tomorrow will be Good Friday, so the markets will be closed. I won't be doing another market report until Monday. So, as to give you a heads up, due to the markets being closed, it won't do you any good. Now, today we did have some important data. We'll start off with the jobless claims we get every Thursday. Initial jobless claims. Last week's numbers were revised slightly higher from 166,000 to 167. Forecast is coming at 171,000. Instead, it jumped up a little bit higher to 185,000. The good news is that we are seeing fewer people, from 1.5 million roughly to just under that, in continued claims. So we're seeing fewer people drop off and more people going back to work, which is good news. Uh, Here's kind of a big one. We got retail sales. So for the month of March, so February's number got revised a bit higher from 0.3% to 0.8%. Forecasted calling for 0.6%, but came in a bit lower at 0.5% for the month of for the month of March here. Now we got some consumer sentiment for the month of April. Its index previously in March at 59.4. Forecast showing it to dip a little bit to 59. However, it did. People felt a little bit better in April to 65.7. Might be all those college kids out there with their spring breaks, right? Anyways, I miss those days. Business inventories, February. January was revised slightly higher from 1.1% to 1.3%. Forecast gone for 1.3% and increased to 1.5%. So obviously, inventories for businesses has increased, which is good news. We've been seeing this slowdown in terms of supply chains, so we are seeing an improvement in that area as well. So again, markets will be closed early. So what we're seeing now is the aftermarkets effect, and tomorrow they'll be closed, and we'll go into Monday for the next one. So here's where we look at. We had the 64. We're down 64 basis points, which translate, of course, worse pricing. We're off from the complete lows, but still pretty far down there. So pricing not so good today. Unfortunately, we have several reprices for the worst. Yesterday, the 30-year auction did not bode well, so we did subside. Like I mentioned, the 10-year did the same thing. It pulled back quite a bit. So I forget where exactly we closed upwards at, but we still closed up decently. So, but today, as you see, we started the morning stronger, but end up closing downwards. Here's what it looks like today. So it just kind of worked its way downwards, almost like a straight line here. So none of these, like what you've been saying, like way up and down here. A lot of this is investors on their final trades before the holiday weekend. They are, we got the start of the corporate earnings reports that came out. We had the ECB give theirs, basically going to stop their asset purchasing program. It sounds like the third quarter, which will start doing rate hikes at that point. Um, that's kind of what was mentioned. So it wasn't nothing too hawkish out of them immediately. It didn't have much of an impact, I don't think, with that. But with that being said, more of the impact is what's going on with the earnings reports and financials that came out like yesterday and today. It's mixed season, mixed. Some are down, up or down. So we got a little mixture of the first quarter for financials from your big banks like J.P. Morgan Chase to Wells Fargo to Morgan Stanley, people like that. So mixed results going on right there. And of course, the big news on with Elon Musk making a takeover bid of Twitter. So that would be interesting to see how that might play out. So regardless, the markets stocks for the most part are in negative territory. The only one that was actually positive was Dow. The others were in negative territory. And meanwhile, just a lot of money just moving in different directions, and we had a lot of illiquidity. Excuse me, trying to get that one out. In the bond market. So just it's not the place to go these days in terms of the inflation numbers that are coming out. Now we do have a few Fed members that have spoken. We got a lot of economists with those inflation data that we saw earlier this week. They are starting to. The sentiment is that the inflation may have already peaked, which may be the good news, and then if anything, it may start coming down, gradually coming down. That would be the good news if that is accurate. So we'll keep our eye on it, but that is the sentiment so far in the markets that the inflation may have already peaked, and the only thing that's kind of propping things up on the headline is energy prices. So of course, if energy prices are up there, those are higher costs involved, and they have to be absorbed at some point. So just a word of caution there. Let's go ahead and take lastly. Oh, here's the 10-year Treasury. We did spike upwards, as you can see here, hitting some more highs at 2.828. So basically 8.23, we'll say, to round off. And then last but not least, we'll look at the 30-year fix, which is at 5.15, and the 15 years at 4.45%. These are the average conforming rates in the U.S., but they do have points built into them, so take that with a caution. And so if you guys would like a E-rate quote, please go ahead and reach out. We can certainly oblige. But again, if you guys got questions about anything, please reach out. We are here to assist. And please help us out if you guys like these videos to smash that like button and share. We greatly appreciate that if you can spread the word about our videos here. You guys have a great rest of your day. Enjoy your long weekend here, and we'll see you guys on Monday. Bye-bye.